All right, this video, we're going to start getting into the crux of how to make money with Forex. We're going to understand a lot of the basic components of how profit is made in Forex. If you look at our trade that we took at the beginning, we started off at $0, went into very little drawdown, and we're just at 6,000, just under $6,000 in profit. And so in this video, we're going to talk about how that profit is calculated. How do we calculate profit? Or what does the world use, the world of Forex, what do they use to calculate profit? So this is going to be an important video to pay attention to. We're going to talk about what makes pairs strong and what makes pairs weak. We're going to talk about that, and then we're going to talk about how price is calculated on a global scale, and you'll start to understand how we make money. I'm going to turn over or expose you to a video that we did. I've been training individuals for a while, and this is one of the trainings that I've done for a bunch of individuals in the group. And I want to show you the video so that you can know how currency strength is done and how profit is calculated. So let's flip over to the video so we can learn a little bit more.
All right. So when these countries' currencies are paired together, what happens is that we have to read these pairs, and we read them as quotes and we call it quotes, or we can call it exchange rate, but we read the value as a price, and then we call that quotes. So I'm going to teach you now how to read a pair's quotes. So let's look at Euro USD. As an example, Euro USD as a quote may be quoted as 1.05484. What that quote says is, well, first of all, what's made up is, first you have the base currency. So whatever currency is in front is the base. Whatever currency is behind is the quote. And this right here is very important while we're trading. What's in front and what's behind, the base and the quote. And then the exchange rate to exchange from the base. The base is always $1, $1, 1 unit or $1. So 1 unit is always the base. The quote, how much of the quote do we have to equal the base's 1 unit? And what this is saying is you need 1.05484. That is the exchange rate. That's the exchange rate. And so, yes, the base is always the dollar, and the exchange rate is exactly what I just said. It shows how much of the quote needs to be bought in order to buy 1 unit of the base. So how much of the quote needs to be bought in order to equal 1 unit of the base, and that'll give you the exchange rate. All right, so I want you to think of this as a scale. If the base is on one side of the scale and the quote is on the other side of the scale, and they're both equal, the scale's not going to move because they both weigh the same. So that essentially says that price stays at $1 or 1 unit. I'm not going to use dollar, I'll say unit. What happens if the base gets stronger and weighs more? What's going to happen to this?
The US dollar quote will go up.
The quote should go up, right? So the exchange rate should rise because the base is stronger than the quote, right? So the price should rise, right? So if the base is stronger than the quote, then the exchange rate or the price is going to rise, right? Now, what happens if the base is weaker than the quote?
Then the cost is going to go down.
Exactly. The cost will fall. So when we look at that, if the basis is weaker than the quote, then the price will fall. When we look at this, when the base is stronger than the quote, in our trading lingual, when the price rise or we think it's going to rise, the term for that is long. We say price is going to go long. Long is, or we may say, I'm taking a long position. It's equivalent to buy. I'm taking a buy. I'm taking a buying position. And so when we believe that price is going to go up, that means price is going to go long, or I'm going to take a buy. But when that base becomes weak and the quote becomes stronger, price is going to fall, and we call that a short. And we say price is going to short, or we're going to take a short position. We also say that we're going to sell, or we're going to take a sell position.
All right, so I wanted to stop right here and go to our MT5 so that we can see what we just learned in real time. Let's go back to the Euro USD trade that we entered in at the beginning of the training. And we took a position at 1.07365. But if you look up here, this dotted line is the original position that we took. And you can see that it says sell 10. So what does sell mean based on what we just learned? Sell means that we are expecting price to go lower. We are expecting price to go down. Why does that happen? It's because the base euro is weaker than the quote USD. And so the exchange rate, we expect it to go down. And so now we're learning that the sell position, we said that price is going to go down, and that's exactly what price has done. And so now we can see that price is coming back up. So we reached about the $6,000 mark. Now we're just under 5,000 as price is coming back up on this. But this concept is exactly what we're talking about in this video. If you look at just price or shorts, is that when that base is weaker than the quote, that quote is weighing this down, that price is going to fall. And so we call that short, we call that a sell, we call that a short position or going short. And so that's what we can see in our MT5 trade that is currently running, is that we are now in a sell position. So now you know something new. We're in a sell position on Euro USD. As it falls, we make money. Now that it's going back up, what do we call that? We call that a buy position. So let's look at that. A buy position is when the base is stronger than the quote. The price is rising. We call that going long or a long position. We also call that a buy position. Going long, long equals buy. And so in our MT5, we see current price action is going up. And so it's going long, which is going against our original idea. So that's why price is starting to go down. Our profit is starting to go down, is because price is going against us at this point. So we'll jump to the next video. We're going to build upon this concept of strong and weak pairs. How do we determine currency strength? How do we calculate how much money we're making? So let's jump to the next video so we can get to that.